Extreme fear has called real market bottoms before. It's also stayed extreme for weeks while price kept falling. Same reading, two completely different outcomes. And the number itself can't tell you whether you're looking at a market bottom or the start of another leg down. If you're using the fear and greed reading to time your entries, you're trusting a coin flip and then you're calling it a strategy. By the end of this video, you'll understand what the reading is actually telling you, so you can use it to improve your trading instead of just reacting to a single data point. First, here's what it actually is. The Fear and Greed Index is a sentiment gauge. It measures how the market feels right now, not where price is going next. Everything else in this video will build on that one distinction. The index runs from 0 to 100 and it's split into 5 zones. Extreme fear and fear sit at the low end, greed and extreme greed sit at the high end, with neutral band in the middle. In practice, it spends most of its time in the middle 3 zones, fear, neutral and greed, and it fluctuates backward and forth rather than sitting at either extreme. There isn't just one version of this index either. A few different versions exist and they don't all use the same inputs. The version I'm using here as an example is from CoinGlass and it's built from 6 weighted inputs. It's updated daily. The 2 biggest carry a quarter of the total weighting, volatility and a combined market momentum and volume score. Social media activity, Bitcoin dominance and Google search trends, they each contribute a much smaller slice, and then you've got a survey component that still exists, but it currently carries a lot less weight than it used to. Worth knowing too, this index is Bitcoin only for now. Altcoin versions are still coming, so if you're trading alts, keep that scope in mind. None of those inputs are about the future. They're just measurements of what's happening right now. And that's a boundary that you need to hold on to for the rest of this video. The Fear and Greed Index is a snapshot of crowd emotion. It's not a forecast. The correct way to use this number is as one input, not the input. When the index is at an extreme, you actually know what a large number of market participants are feeling at the same point in time. That's genuinely useful information. Crowded emotion in one direction is often a condition that is worth paying attention to. What you do not know from this number alone is that when that emotion is going to resolve, or whether it resolves the way that you would expect. Extreme fear can mark a real capitulation. It can also sit at extreme levels for an extended stretch before anything changes. The index alone can't tell you whether this is a capitulation or just the early part of a longer downturn. It only tells you that the crowd is scared right now. Here's a real example. On the 27th of Feb 2025, the index read 10, and that's about as extreme fear as it gets. Bitcoin was trading just under 85,000 at that moment. Looking at that number alone, you'd assume that the market was falling apart. The story didn't end there. Price ended up recovering slightly to 87,000, then it capitulated down again to 76,000, with the index reading about 18 on the 9th of April. Still extreme fear, 2 separate extreme fear readings, weeks apart, and neither one of them was the final word. From there, price ended up rallying and climbing steadily over the next 4 months to a new all-time high around about 126,000. Zoom out to the higher time frame and both of those extreme fear readings show up inside a broader uptrend, not at the start of a collapse. Bitcoin had already climbed significantly over the prior year, and those two were sharp pullbacks inside a larger trend. And price went on to push well above and well beyond its previous highs afterwards. That's the part that traders miss. Extreme fear doesn't tell you whether you're looking at a macro bottom or just a pullback inside of an uptrend. It doesn't tell you whether the next reading will be one that finally turns things around either. By itself, the fear and greed number doesn't tell you which way the price is going. That's what the higher time frame structure is for. This is market context, not prediction. The lesson is not extreme fear means buy. The lesson is extreme fear means that the crowd has moved to an emotional edge, and I should check what my own plan and the high time frame structure actually say before I do anything with that info. The first misread is treating extreme fear as a guaranteed market bottom. Traders see this needle bury itself in fear and assume that the worst is priced in. Then they just buy without a reference to a structure or a plan. Sometimes it works, sometimes fear will end up staying extreme for a long stretch while price keeps finding new lows. The index can't tell you whether this is the market bottom or just another leg down. It was never designed to do that. The second misread is the mirror image on the other side. Extreme greed does not mean sell everything immediately. It means a lot of people are feeling confident at the same time, which is worth noting, not worth acting on by itself. The pattern underneath both misreads is the same. Traders take a measurement of the current emotion and treat it like a timing tool. It was never built to be one. I'm not telling you what to do with your capital here. I am telling you what this specific number can and cannot tell you. Here's a simple way that you can actually use this index without misusing it. First, treat an extreme reading as a prompt, not a signal. It's a reason to go and check your existing plan, not a reason to invent a new trade on the spot. Second, look at alongside market structure. Sentiment tells you how the crowd feels. Structure tells you what price is actually done. Use them together, never one in place of the other. Third, if your reading lines up with a level or zone that you'd already identified before the emotion showed up, that's context worth weighing. If the reading is the only reason that you're considering a move, you're making the exact mistake that this video just warned you about. The Fear and Greed Index measures what the crowd feels right now. It does not measure what price will do next. Extreme fear is not a buy button. Extreme greed is not a sell button. Used correctly, it's one piece of context that sits alongside your structure and your plan. Used incorrectly, and it becomes a replacement for both. The point is to prepare you for what the index is actually telling you, not react to a number that was never built to predict anything. If this kind of framework thinking is useful to you, come and work through it with other traders in the crypto mercenary community. You'll get like-minded traders to talk through it with, access to the custom indicator suite, and a place to actually put this stuff into practice. The link's below. Thank you for watching.